Well, the high frequency indicators are certainly pointing out to an uptick. These indicators have shown good uptick since July as well as in the month of August. In fact, the Nomura India Business Resumption Index has crossed the milestone, rising to 101.2 level for the week ending 15th of August. And do note that this index stood at 99.6 level just last week itself. The index has risen above the pre-pandemic level of 100 for the first time since the pandemic began. In fact, the index tracks a host of high-frequency indicators indicating the Google mobility indicator, power consumption, and host of other indicators. And Google mobility indicator has suggested continued uptick, with the workplace and retail and recreation index rising by close to around 1.7 percentage points and 3.4 percentage points respectively, while the Apple driving index has fallen by 0.8 percentage points. The power demand has risen a solid 5.7% on a week-on-week basis, while the labor participation rate has eased slightly to 40.4% versus a 41.5% earlier. The recovery from the second wave has been fairly swift, says Sonal Verma as well as Aurodeep Nandi of Nomura. They state that it took the Nomura India Business Resumption Index nearly 10 months to crawl back towards the 100 mark after the first wave of COVID-19. However, it has taken less than 3 months for the index to cross 100 mark after the second wave. They're expecting that this entire resumption in the index is supporting a more positive growth outlook that they're expecting. For the April to June quarter GDP, the data is likely to be released on 31st of August. Nomura expects the GDP to contract by close to around 4.3% on a sequential basis. However, the April to June quarter GDP is likely to rise as much as 29.4% on a YY basis, of course on a lower base, and Nomura's expectation is ahead of the consensus, which expects 19% GDP, and it is also ahead of RBI's expectation for the Q1 GDP of 21.4%. Not just that, the continued rise in the Nomura India Business Resumption Index during July as well as August is also suggesting a strong sequential rebound is also likely in Q3 itself. They're stating that the economy is not yet out of the pandemic woods, but the current dynamics are surely supporting their above consensus GDP forecast for FY22, which stands at 10.4%, wherein the RBI itself during the recent monetary policy has retained the GDP forecast for FY22 at 9.5%. So yes, do watch out for those high frequency indicators. The indicators are surely suggesting an uptick. We of course need to be watching out for the uncertainty on account of the COVID third wave, and yes, so far the Q1 GDP is watch out for the Q1 GDP data rather. It is going to be released on 31st of August.